When it comes to cars, cheap isn't always cheerful, and expensive isn't always overkill. The real question isn't the sticker price, but what you end up paying over years of ownership. From repairs and maintenance to depreciation, insurance, and fuel, or even unexpected tech upgrades, every choice has a hidden cost. Today, we're digging into what you really pay for when you choose a budget ride versus a luxury model, and why the cheaper option might cost you more than you think. Today, we will talk about expensive versus cheap cars, what you actually pay for in the long run. So before we start, make sure to hit the like button and subscribe to my channel. 1. The illusion of the sticker price. When deciding between an expensive luxury car and a more affordable model, most people focus on the sticker price. However, the initial cost is only a small fraction of the total expenses you'll face over the car's lifetime. Expensive cars may come with higher performance, better materials, and advanced features, but they also carry heavier depreciation, insurance costs, and maintenance burdens. Cheap cars may lack bells and whistles, but their lower purchase price, reduced depreciation, and simpler technology often make them financially smarter in the long run. Understanding that the purchase price is just the tip of the iceberg is crucial to making informed car buying decisions. 2. Depreciation disparities between cheap and expensive cars. Depreciation is a major long-term cost that differs drastically between cheap and expensive cars. Luxury vehicles can lose 40 to 50% of their value within the first 5 years, whereas mid-range or budget cars often depreciate closer to 25 to 35%. For example, a $60,000 luxury car may drop to $30,000 in 5 years, while a $20,000 compact car may only drop to $14,000. Depreciation affects trade-in value, resale potential, and overall cost of ownership. It is often the largest hidden expense people fail to calculate when comparing vehicles. If your goal is to maximize financial efficiency, understanding depreciation patterns is critical. 3. Insurance premiums are significantly higher for expensive cars. Expensive cars come with steep insurance costs due to higher repair expenses and replacement values. Insurance premiums for a luxury vehicle can easily be 2 to 3 times higher than for a basic sedan. Factors such as performance engines, advanced electronics, and high replacement parts contribute to elevated rates. Cheap cars, in contrast, often carry minimal insurance costs and simpler repairs. For long-term financial planning, factoring in insurance is essential because it affects monthly budgets and total ownership cost. Many buyers underestimate this recurring expense, which can accumulate into thousands of dollars over several years. 4. Maintenance and repairs. Add up faster for expensive vehicles. Luxury and high-end cars have more complex components, specialty parts, and advanced electronics. Repairs can be costly, often requiring dealer service and expensive parts. Routine maintenance like brakes, tires, and fluid replacements also costs more than standard models. Conversely, cheap or mid-range cars tend to have simpler designs, widely available parts, and lower labor costs, which makes long-term maintenance more predictable and affordable. Even a single major repair on a luxury vehicle can offset the perceived prestige of owning it, while budget-friendly cars often allow owners to maintain reliability at lower expense. 5. Fuel economy and energy costs. Differ expensive vehicles, especially performance or luxury models, typically consume more fuel or energy than smaller, efficient cars. Gas or electricity costs over years can accumulate into significant expenses. For example, a high-powered SUV or sports car can cost $1,500 to $2,500 per year more in fuel than an economy car driven the same distance. Even with fuel-efficient technologies, weight, horsepower, and aerodynamics make expensive cars less energy-friendly. Cheap cars often provide higher efficiency, which translates into savings over the vehicle's life, further tipping the scale in favor of long-term financial prudence. 6. Opportunity cost of tying up capital in an expensive car. When you spend $60,000 on a luxury vehicle, that money is effectively locked in a rapidly depreciating asset. The same amount invested in stocks, retirement accounts, or real estate could grow substantially over the same period. Budget-friendly cars allow you to maintain liquidity and redirect extra funds toward wealth-building opportunities. Considering opportunity cost highlights why expensive cars are not just about upfront affordability, they also limit your ability to grow net worth. In the long run, the decision between expensive and cheap vehicles often comes down to trade-offs in lifestyle versus financial growth potential. 7. Technology and feature costs. Expensive cars often come with cutting-edge technology, autonomous driving features, and premium infotainment systems. While appealing, these features often increase repair costs, require software updates, and may become obsolete quickly. Cheap cars tend to prioritize reliability and simplicity, keeping long-term maintenance predictable. Buyers need to consider whether advanced features justify the extra cost or simply add financial burden. Technology that seems attractive today can become an expensive liability over time, particularly if repairs or updates are required outside warranty coverage. 8. Long-term resale value considerations. Cheap cars may hold value better than expected if reliability and demand remain high. Expensive cars often experience steep depreciation, especially luxury brands or high-performance models, making resale a significant loss. Buyers must consider the real cost of the car over years, not just monthly payments. Resale value impacts trade-in offers and the ability to upgrade later. Choosing a vehicle with predictable long-term value protects finances, whereas expensive cars may look appealing but result in larger financial loss when it's time to sell. 9. Psychological versus financial value. Expensive cars offer status, luxury, and driving experience, which have psychological value. Cheap cars offer practicality and financial efficiency. Many buyers overestimate the importance of prestige while underestimating the real cost of ownership. Over time, the financial burden of an expensive vehicle, insurance, maintenance, depreciation, and fuel, can outweigh the satisfaction it provides. Recognizing the difference between perceived value and actual cost is critical. Balancing personal enjoyment with long-term financial health ensures that car purchases support rather than undermine overall wealth. 10. The takeaway. Look beyond the price tag. The long-term cost of owning a car is far more important than the initial purchase price. Expensive cars may offer luxury and performance, but they come with higher depreciation, insurance, maintenance, fuel, and opportunity costs. Cheap or mid-range cars provide financial predictability, lower ongoing expenses, and greater flexibility for wealth building. When evaluating vehicles, consider total cost of ownership, long-term value, and how the car fits into your broader financial goals. The smartest choice often balances practicality with personal satisfaction, ensuring mobility without compromising your financial future. If you liked this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.